Wall Street is ignoring the crisis in Asia, but the man who almost broke the Bank of England believes global capitalism is in trouble. Is he right? Welcome, I'm Merrill Comer, and you're watching It's Your Business. Coming up, an exclusive interview with international financier George Soros. We'll have a debate on the future of the International Monetary Fund, investment advice from Merrill Lynch, and an interview for all the digerati and Generation Xers in our audience with information technology guru Nicholas Negroponte. But first, some tough talk from George Soros, one of the world's most famous investors, who more than once has been blamed for a country's extreme currency fluctuations, just the way he buys and sells, and who recently expressed doubts about the future of global capitalism to Colin Chapman of the Financial Times.
We do now have, again, a global capitalist system. It's very vigorous, and I think it's unstable. And I think it's built somewhat on the wrong principles, because there is a sort of a prevailing market fundamentalism. I used to say laissez-faire, but that's a French word. So I think market fundamentalism is a better way of describing, of believing that governments ought not to be involved in regulating the economy. And certainly international institutions shouldn't be allowed. And I think that is a false perception, because markets are, financial markets are inherently unstable. It's part of the system. And this goes contrary to the received wisdom of economic theory, which talks about equilibrium. Right now, everybody talks about imposing market discipline, as if that would take care of everything. I think you need to have an additional discipline, because if markets are inherently unstable, imposing market discipline, you are imposing instability. And how much instability can you live with? So you have to introduce this additional principle. Maintaining stability has to be an objective of public policy. And since we now have a global economy, we don't have the global institutions. We have them on a national scale, and they are working very well, but we don't have the international institutions.
When you meet policymakers, you meet them all the time, what do you say to them about how they should tackle this problem?
Well, as soon as things calm down, I think that there really ought to be a serious re-examination of the system, and there has to be institutional changes. I've made some proposals. There are others. I think it's a process of, like you had at Bretton Woods, a conference discussing what needs to be done, out of which came the IMF and the World Bank. I think it's time to re-examine their mission and their functions, and learn some lessons.
Are you saying these institutions are past their sell-by date, or could they be remodeled?
No, I think actually we are very lucky that we have them. Without them, the system would have collapsed at least 3 times in the last 15 years. 1982, 1994, and 1997. So there's no way am I saying that they should be abolished. What I'm saying is that just as central banking developed in the 19th century, each time there was a crisis, there was an improvement in the institutional structure. We now have to do this, and the improvement that we have to make is recognize that we now have international financial markets. Therefore, we have to strengthen the international institutions.
Coming up, do we need the IMF to be financial watchdog and lender of last resort? When we continue, I'll be joined by Jim Glassman of the American Enterprise Institute, Jurek Martin of the Financial Times, Edward Yingling of the American Bankers Association, and Bill Beach of the Heritage Foundation. Stay tuned and find out what the $18 billion extra the president wants for the IMF bailout fund will really cost us. Stay with us.
This guy is a very simple job. See the puck? Stop the puck. See the puck? Stop the puck. Puck, bad. Glove, good. Simple. Just like
AT&T One Rate International. One low rate per country on calls from home anytime.
Exactly.
What about that 10-3-2-1 thing?
With One Rate International, most calls cost less.
So what they're basically saying...
Playing hockey, talking at the same time? Bad.
The AT&T One Rate International plan.
When partying with your buds, be sure to choose a designated driver. It's the perfect pick-me-up. A message from your friends at Budweiser and O'Doul's.
Great party.
Welcome back. I'm Merrill Comer. The issue before us is, does the IMF need to change the way it does business? Jim Glassman, for 50 years, the IMF has been bailing out countries in trouble since the 80s, acting like a lender of last resorts. Has it lost its Midas touch, and how serious is the challenge from Indonesia?
I think it certainly has lost its touch, and what we're seeing right now is something that's unprecedented, which is a lot of very serious opposition to the IMF, very respectable people saying, maybe markets ought to take care of these problems. And it was interesting to see George Soros, who, in my opinion, ought to get back to making money for his clients, saying, well, financial markets are inherently unstable. That's true. There's no doubt about that. But what do you have to substitute for it? You know, philosopher kings like George Soros, perhaps. You know, markets have their ups and downs, and they are inherently unstable, but they really are the best way to solve these problems.
Jurek Martin, since last July, $120 billion is headed toward Asia. Is that money well spent by American taxpayers?
Oh, I'm not sure it's well spent by American taxpayers, or you could probably argue the same sum. Is it well spent by Japanese taxpayers in somewhat smaller amount, or European taxpayers? Money cannot easily be controlled. The flow of money cannot easily be controlled. I agree with Jim Glassman. The market imposes disciplines. The market may well require people to lose money on their investments rather than necessarily to be ultimately secure in their investments, courtesy of the IMF or anybody else. But I think that the question really is, and George Soros touched on this too, is of the preservation of some kind of international monetary and economic policy making regime as vested in the IMF, and its existence is indeed in some threat.
Ed Yingling, let's look at self-interest. If Americans don't support the IMF, you say we're playing Russian roulette with our economy. Now, why?
Well, first, I think we ought to say that no taxpayer money really is lost when we give money to the IMF. The IMF is run like a bank. Our country deposits money in the IMF on which we are paid interest. They lend the money to countries like those in Asia, and then that money is paid back. So it's not really costing the taxpayers a lot of money. It is very cheap insurance against what could be an economic triple whammy against this country.
So that's your Russian roulette that you're talking about?
Absolutely. First, we could see our exports to Asia drop considerably, then our exports to other countries like Latin America, if there's a contagion effect. Then as their currencies devalue, they will be selling goods much more cheaply around the world. Our economy could have a real problem because 1/3 of the growth in our economy is driven by exports.
Bill Beach, there is a concern about the impact on the American economy. Now, what do we know and when is it coming, and to what degree is this American economy immune?
Well, the Asian crisis, the Asian financial crisis, has already started to slow the economy. Most forecasters are looking for the economy this year and next year to slow well below what it should have been operating at, and this is particularly going to be difficult for manufacturing and the exports of plastics and chemicals and some food products. But in many respects, what we have here is the fulfillment of an insurance problem. It's called moral hazard. Many people don't disagree that the IMF recommendations are the right recommendations. Change your financial system, get transparency in banking. But the problem is not at the back end of what the IMF is doing, it's at the front end. By telling countries, we're there to bail you out if you make problems, particularly the kinds of governments that we're dealing with in Indonesia, we're essentially producing a moral hazard problem. Get into trouble and we'll bail you out. So I disagree with my colleague's comments. Taxpayers are losing money here because they're losing potential output and wages and incomes.
Jim, how does this become a political issue in this country?
Well, it already is a big political issue because there's a decision that's going to be made probably next month about what to do with more money that's supposed to go to the IMF, a total of about $18 billion in two stages, and there's a lot of opposition, both from protectionists who defeated the fast-track legislation last year, but also from free market types like me, who was very much in favor of fast track, but who believe that this is too much intervention in the market. Let me just say one thing about what Ed just said about exports dropping, imports coming. First of all, cheap imports I think are wonderful, and I think most Americans will be delighted to get cheap imports. Obviously that can go too far. But as far as exports dropping, I mean, that's going to happen anyway. There's no doubt about that. As a result of what's going on in Asia, there's going to be a recession in Asia. It's already started, and they're not going to be of the kind of market that we want. The question is how to solve this problem for the future, and that's why I agree with what Bill just said.
Mr. Martin, how do we deal with that concern strategically about the social unrest that we're seeing in countries like Indonesia? I mean, can we afford that?
Oh, I don't think that the United States can do much about social unrest in Indonesia, to be perfectly honest. I mean, that is an indigenous Indonesian problem, just as you could argue that what happened in Moscow or in the former Soviet Union was an indigenous Soviet-Russian problem, which we can only influence at the margins. I think that the Indonesian bailout presents unique and particular problems, and one which really does challenge the authority of the IMF and Larry Summers and everybody else from the United States government who's involved with it. Is what President Suharto is now doing, establishing a currency board and pegging the rupiah to the United States dollar, essentially a way of protecting the vast investments that his family has over the Indonesian economy, or is it a legitimate, an absolutely legitimate economic policy tool? Unfortunately, the burden of suspicion is the former, and it is also the burden of suspicion which the IMF and most everybody else feels. So it's a real toughie, this one.
And let me just ask you, in testimony to a Senate panel, Federal Reserve Chairman Alan Greenspan said that the Western form of free market capitalism is the winner, it's quite obvious, and that the Asia's cronyism capitalism is the loser, and it looked very attractive a decade ago. Now, what's the difference now?
Well, I think Greenspan is correct in that the model that we had in some of these Asian countries where the banking system, the commercial system, the businesses, and the government were too close to each other has proven to be a model that causes severe problems. I'd just like to comment on the strategic interest we have in this area. We have fought two major wars since World War II in this part of the world, Vietnam and Korea. We have 37,000 troops sitting on the border in harm's way between North and South Korea. That's another reason why it's very important to support the IMF, because political instability there is a real concern for our country.
Okay, Jim, let's give him $18 billion. Go ahead.
No, I really think that when you hear this argument being trotted out, then the backers of the IMF money are clearly in trouble. And we're going to hear this from the administration. I'm not saying you're parroting any kind of administration line, but, you know, look, there's going to be unrest in that part of the world, whether there's an IMF bailout or not. I don't think one thing has anything to do with the other. The other thing that surprises me, it seems to me that this is a great opportunity for your organization to blast open some of these markets, which I think is the big problem. I mean, American banks really could be solving this problem themselves by taking over Korean banks. And I would not give a dime to the IMF until there's a condition that any country who receives money from the IMF only receives it if it accepts global banking. I think that's a condition that you should be able to accept.
The problem with your model, though, is that you assume that the result in these countries of free market policies would be a move toward our type of economy. History tells us that when you have this kind of dramatic economic problems, those countries move either far left or far right.
Well, let's use the leverage let's use the leverage to get that result. That's what I'd like to see.
But Bill Beach, let's talk about some of the liberal concerns liberal concerns for reform. I mean, they're concerned reform the IMF and make sure we've taken care of labor and environmental issues. I mean, what is the new model for the IMF that people will buy into?
Well, I'm not an expert on what the new model for the IMF is going to be. The IMF probably needs to evolve away from World War II and the problems, the concerns that we had what you just voiced, and that is that if we have this unstable world, we'll have another Hitler, another Stalin, another whatever. And it needs to move now into a point where it is lender of last resort of currency reserve, bridge financing. Perhaps that's its new role. Introduce global banking, introduce these global agencies, be a leader in that area, because you see the market now is doing what markets really should do. Markets find value in hidden places. They find those kinds of good things that are happening. There are many good things happening in Asia, and it's finding the good things and sorting out the bad things. We don't want to stand in the way of that one bit, and certainly the IMF needs to be cognizant.
All right, bottom line, Jim, will Congress approve $18 billion more?
I think that Congress will approve $3.5 billion only, and there will be a lot of conditions attached, as there should be.
Unfortunately, thank you, gentlemen. We're out of time. After the break, market advice from one of the world's top investment houses and an exclusive interview with IT guru Nick Negroponte.
Who could have foreseen that a banking crisis in Thailand would lead to stock market falls all over Asia? Corporate losses in Japan, canceled export contracts in Europe, and one U.S. fund losing half its capital. One newspaper did, the Financial Times. With an unparalleled global network of correspondents, the FT delivers unrivaled intelligence. Call 1-800-FT-DAILY for a free 4-week trial subscription. That's 1-800-FT-DAILY. Financial Times. No FT, no comment.
Based on recent news that the number one asset for the baby boom generation is their stock portfolio, we begin a new investment feature pegged to the issue that we've just debated. And joining us this week is Walter Murphy. He is Senior Market Analyst from Merrill Lynch in New York. Good morning.
Good morning.
Let me just ask you, we've been debating the whole future of Asia and the IMF. Investors don't seem to be too concerned about what's going on in Asia. Is that wise?
I think at this point, from a global perspective, it's probably not terribly wise. The damage that was done to the markets late last year and into the early stages of this year, I think was quite significant from a technical perspective, looking at the movements of the market themselves. So I'm inclined to think that for a lot of those smaller Asian markets especially, Japan's a major exception, I like Japan a lot, but with the smaller Asian markets themselves, I think the rally we've seen in recent weeks is a temporary respite.
Let me just ask you, Walter, that whole area of technology stocks, Dell's first quarter earnings took even analysts by surprise. Where are we in that sector?
It really comes down to which part of the technology sector you're looking at. If you look at the semiconductors, they are rallying quite nicely and have retraced about half of their decline. They're up 25% from their most recent bottom. You look at the internet stocks, they're only about 3% away from their all-time highs. So it's really I think, a factor that the markets are rallying and bringing that group along. But it's not a specific broad-based technology rally. It's a pick-by-group type of an event.
Walter, just quickly, does it surprise you that 2/3 of U.S. venture capital now goes into technology stocks?
That's a bit overblown. It's a bit overbought, and would expect some sort of correction from that aspect, given what we just talked about in terms of the individual breakdown of the technology sector itself.
Thank you so much, Mr. Murphy, for joining us. Next week, we'll be debating healthcare, and if you have any investment questions on health-related stocks, just get in touch with us. Email us at fttv@iyb.org. After the break, Nick Negroponte. Don't go away.
If you've been getting those phone stickers, you may be getting a little confused. So allow me to simplify.
I love stickers.
Okay, but if you're calling anywhere in America or anywhere around the world, most calls from home will cost you less with AT&T One Rate and One Rate International.
So you're saying the sticker...
I'm saying if you use those stickers, you could get a little sticky. You might get stuck paying more with those stickers.
Yeah, I know, I got that. But I love stickers.
Never been more frightened in my life.
In America and around the world, the AT&T One Rate plans.
When partying with your buds, be sure to choose a designated driver. It's the perfect pick-me-up. A message from your friends at Budweiser and O'Doul's.
Great party.
Wall Street ignores the crisis in Asia, but the man who almost broke the Bank of England believes global capitalism is in trouble. Is he right? This week on It's Your Business. Wall Street ignores the crisis in Asia, but the man who almost broke the Bank of England believes global capitalism is in trouble.
But there is need for a political process to create a system that we actually would want to live in.
This week on It's Your Business, an exclusive interview with international financier George Soros, a debate on the future of IMF, and advice from Nicholas Negroponte, the technology guru. Join us, won't you? Nicholas Negroponte is the director of the Media Lab at the Massachusetts Institute of Technology, and he's regarded as one of the world's leading experts on information technology. Colin Chapman spoke with him.
What's happening is that the digital world is becoming commercially interesting, and suddenly we're going to see people who thought it was a curiosity realizing it's their main business, it's their future. And at the moment, we're underestimating electronic commerce enormously. In fact, if it's any less than $1 trillion by the year 2000, I'll be surprised, because we're going to see a rapid movement. And that movement's going to be caused by a whole lot of people coming into the game, if you will, who were previously voyeurs and will now be actors.
Do you think we've conquered the risks associated with electronic commerce?
We haven't conquered the risks, for sure, but if you look at electronic commerce from the consumer point of view, the transactions will be small, and to some degree the risk is more the consumer's privacy than the transaction in the sense of losing money. From the commercial point of view, we already have $2 to $3 trillion a day moving around the planet electronically, so that sector, at least people know how to handle the problem. So security is not the main issue at the moment. It's probably payment systems that are going to affect the consumer.
And what impact do you think this is going to have on business? Because business has been relatively complacent about this so far.
Two impacts on business. One is that many businesses will be, and I hate the word, but they'll be disintermediated. They'll be pulled out of the middle, and there'll be a much more direct line between the consumer and the producer. That doesn't mean there'll be nobody in the middle, but there'll be less people, especially if what you're selling is in the form of bits. The second thing that'll happen is people are going to have to invent some new economic models, because we've gotten very complacent about sort of what we consider value, what the consumer considers value, and how you make your business and your profit. But we're going to have to become very clever, because people are going to suddenly not be paying either on a subscription basis or pay-per-view. It might be through advertising, it might be through micropayments. In fact, people might pay for the news in terms of its relevance to them. I mean, totally different models.
Now, in this question of commerce, you have some interesting parallels, because you have people like Michael Dell, who really is doing extremely well out of cutting out the middleman. But on the other hand, it's hard to see retailers in the food sector going, isn't it? I mean, it's hard to see manufacturers, put it this way, the Procters & Gambles, the Unilevers, the General Foods, doing without the intermediary, the retailers.
I divide the world neatly into two parts, bits and atoms. And the world of atoms, obviously, is going to adapt at a different rate, because you have to move these things. And if you walk out of a supermarket, you look at what was in your cart and is now in shopping bags, to imagine that each one of those items would be individually delivered to your home would be a little bit far-fetched, at least in the near future. But a great deal will be sold direct. Things like books already. There really is no reason to have bookstores. Bookstores aren't for selling books. Bookstores are for you to go and browse, for you to maybe meet somebody. But if you want to buy a specific book, you would be foolish not to go to Amazon.com or some other site on the web.
Using the web, of course, is very good in those areas. But what about bigger value items like motor cars? Could you see us buying our automobiles on the web?
Absolutely. Again, you have to be able to try things and browse. And serendipity, of course, plays a very big role, and serendipity doesn't work too well on the web when it comes to shopping. But a car, for example, right now you find people who team up over the net, and then they go as a block of 20 or 30 people to buy the same car, and they get a very, very good price. And they'll go to the dealer and they'll get extraordinary discounts.
A glimpse of our future from Nick Negroponte. On behalf of our new media partner, Financial Times TV, the broadcasting arm of the Financial Times newspaper, and the new global team at It's Your Business, that's it for this week. I'm Merrill Comer. Thank you for watching.